Okay, hi everyone for joining us today. So today's session is on business startup costs, preparing a cash flow budget. So today's topic is aiming to help you to understand the parameters to consider in your cash flow budgeting. So for those who don't know us, ASAT Central is an open innovation platform with a focus to incubate and accelerate the growth of deep tech startups. Today, we are honored to have Aprilina Loh, founder of CPA Services, to share with us on this topic. So CPA Services Connect is the first Xero Platinum Partner in Singapore, and they have been redefining the benchmark for individuals and business clients by applying financial and business expertise to publicly traded companies and privately held businesses. So without further ado, I would like Aprilina to take the stage and start today's session. Aprilina, you're muted.
Hi, everybody. Hi, my name is Aprilina, and I'm from CPA Services, previously known as CPA Connects. And I myself have been a business partner for over 10 years. In 2017, we actually became the first platinum partner in Asia for Xero. Xero is technically a accounting software. And we are very proud to have onboarded 500 or more SMEs into cloud accounting software for all my clients. We are now 98% all fully on Xero on cloud. So, sorry. Okay. So I shall start with what is cash flow? Do you understand what is cash flow in a company? It technically means the increase or the decrease in the amount of money that you have in your company. And why is cash flow important? Cash flow is very important. Cash flow is actually king. It means everything. Whether or not you are able to pay for your salary, pay for your investments and everything. So cash flow is definitely one of the most important things in the business. So I will be starting on some of the topics today. What are the parameters? And how can an accounting software actually help for you in your budget cash flow? And what are the critical cash flow milestones that you will be facing if you are to start a business or already in a business? So one of the first parameters to consider is your initial paid up capital. This is your first capital expenditure. And this is the money that you will be able to first start a business. For example, simply put, incorporation fees for the company will be at least like 1,000 plus. And then to open any bank account in Singapore, well, there are zero sums, but sometimes they do charge like a monthly fee every month. So minimally, typically, I would normally advise $5,000 to $10,000. Then, of course, your rentals and etc., marketing fees and everything. So every business is different. We have to then see what is your needs, and then this will be used for your capital. Okay, next will be your income. Everybody loves income. So this is your first point. But normally in startups, for the first few months, we normally don't have any income. And then with that, we will actually have to start from your capital. So we have to then make sure that what are the products and services that will be coming in money, and how can we ensure that this amount is consistent. Direct costs. So some of the direct costs are normally like your rental, like your product costs. If it's in a retail, your products that you have a cost in it, shipping costs, and whatever cost that is normally associated. So operating expense. Operating expense is actually quite vast. So it is like every business is also different. Normally, it will be like your internet, bookkeeping fees, your insurance, bank fees, electricity, Wi-Fi, and rental. So these are called operating expenses. It is like the basic need that you need to have to run your company. Employment, yes, employment cost, right, is one of the biggest costs as well in all businesses. And one thing that I always note in most startups is that they normally don't pay themselves well. So I will always recommend them to actually pay yourself well first, so that you are comfortable with your own budgeting, and then from there you are also comfortable with your own business. Financing costs. Financing costs is actually not necessary, but sometimes when you overrun your capital, then we have to look into financing expenses. The loans best, the interest rates are very different for each and every loan, so we have to pay into attention on this as well. I'd like to share with you one case that I actually personally encountered. I have a startup that they had a paid up capital of $1 million in cash. They actually managed to get an investor who is willing to give them $1 million. But after a year, they had zero income. But the direct cost, the direct cost is about 850,000 over a span of 8 months. By the time I know them, and by the time I got to know them, they had already spent $850,000 into software investments and into the technology. So by the end of the entire year, they actually have already spent 999,000, which means they technically left $10,000. And with zero income for the entire year, the investors were unwilling to put in any more dollars. So this is a very interesting case study whereby rarely startups have so much cash, but for this startup, they actually had $1 million. If they had planned their cash flow properly, and they might have done properly, their ongoing cost was even more, because after paying 850,000 for a software development, namely they were actually working with IBM, and IBM is a very big name. They were a darling of IBM, but unfortunately, after having 850,000 invested together, but still the product was still not ready to roll out to the market, and they didn't have any more money for marketing funds. They didn't have money for anything else, and no investors was actually interested in them, because after a year they still couldn't get anything up at all. So that's why cash flow is actually very important for us. With this, I saw that there is a question here. Why would the investors actually give them 1 million without checking how the capital will be used? That's a very good question. This investor is actually a family member, and they actually convinced their parents to actually give them this money. So yeah, and after they, yes, the investors are actually parents, but of course $1 million is still not easy for anybody to actually come up with this money, and it shouldn't be used like this as well. So sorry, I think my screen hang. Okay, yeah. Is there any other questions? In this case, how can they better manage their cash flow? Yes, I will be going on to this question next, actually. So if you look at this screen now, this is a Xero accounting software that you can actually have a budget, and you can actually plan your budget well from here. This is Xero, directly from Xero. All you have to do is like to pay a monthly subscription to them, and then the feature is there. You can actually predict and then manage your software. Then from here, you'll be able to know on a month-to-month basis how much do you actually need to know. This is normally done from the beginning of the year or even earlier, so that we will then know how much we can actually forecast that we actually need. So this is a month-to-month budget, and then we'll be able to actually compare it based on a month and the actual spending. From here, we'll be able to monitor very, very closely how are we supposed to use this budget. And then the next one would be, this is actually like a very simple dashboard in the accounting softwares. And you'll be able to see it here, total cash in and total cash out on a monthly basis. This is like a chart that you can simply use Of course, managing and then reconciling all your bank accounts, making sure that the money actually goes in and goes out are actually properly recorded. Then you can also see like your invoices, how much are they really owed to you, and then how much are the bills that you need to pay. In a simple nutshell, this is the cash flow that you're looking at. I hope I answered Sharon's question. Okay. And next, some of the critical milestones, I would actually say that the critical milestone is actually timing. And with timing, you have to time your sales income very, very carefully. And if the sales income do not come in on the correct time, we will then go into our capital. After capital has been used up, we will look into fundings or investors. And then, of course, last case resort, we will go into our loans. This is the expenditure cash flow problems that the typical people will actually face in their day-to-day or even month-to-month companies. Mostly would be the salaries. With a new startup, people is always an asset, and the salaries are always the one that needs to be paid immediately. So we have to look into our salaries very, very carefully. Of course, the overdraft budgets. Overdraft is your bank loan. And then your working capital, if we have enough or not enough working capital to actually last the company for a few months. Then the lack of profitability, that will be actually your sales. So if we do not have enough sales, how long are we actually able to last the company? Next will be your tax. Tax can be yearly tax or your money GST. If you have collected GST, then you need to pay back to the government. And then your creditors. The creditors, right, is mostly like if you have a product and you need to get some from your suppliers, you need to pay them, and what are your credit terms with them. So if you're able to like negotiate a better term with them, we are then actually able to drag our cash flow, and we are able to plan our cash flow carefully at the same time. Is there any questions and answers so far? Okay. So I would like to share a personal story as well. I started running my own business for about 10 years now. Previously, it was a construction industry and dealing with the government sector as well. Cash flow in that sense is like, it's always confirmed that I will always get payment. But because of the fact that we require a longer payment period, like for example, if I bill 500,000 today, I can only get my cash like 3 months or even 4 months later. So typically in the construction industry, I'm always having cash flow issues. And those were the days whereby sometimes we couldn't pay our supplier in time because of the timeline. So that's why for cash flow, one of the major issue would be your scheduling of time. That is actually very, very important. So if you are able to plan your time very, very well, you are actually half there, and you actually win the war by half already. So one of the important parts when we do our cash flow budgeting is knowing how long will you get paid, and how much time do you have to pay your suppliers. So I see that I have a question. Can you go back to the first slide on what's the initial cash needed? Okay, just give me a minute. Okay, initial cash needed for paid up capital would be actually, like I mentioned earlier, your incorporation fee for starting up the company. If you look for a professional firm, it will normally be like $600 to $1,000 depending on your requirement. But if you're a Singaporean and you can do it yourself, you can actually go online to register for a company. at $360. But if you have like shareholders or partners that are working together, I would normally recommend that you go to a firm to get it professionally done. And they will normally, for me, I would always advise about your shareholdings, and then I will also prepare a shareholder agreement between you and your partner. This is always what I believe in. Andy, do I answer your question? Yes. Okay. So, yes. Actually, I would like to touch a little bit more about your budget summary here. So if you look at it, right, if you can see here, these are most of the expenses that you will normally have, which is like your sales, which I've covered, and then your cost of goods. So every month you can actually do like a prorated additional 5% or 10%, depending on your own projection of all your costs involved. And then the advertising fees. Do not underestimate small little amounts on a monthly basis, because after a while, when you add everything up, it actually comes out to be a very, very big amount. And these costs we have to pay every month. Can investors affect your budget, like restricting the salary, etc.? Well, yes, yes and no. Technically, after investor give you a sum of money, they can tell you that most of the time what we'll do is that we will propose to the investors that this is X amount or how much percentage, maybe like 30% or 40% of the total expenses will go to salary, for example. But how do you actually pay your staff, and it is really up to you. And of course, for you to justify why is this person being paid more and stuff like that. I hope I answer your question. So from here, this is also a this is actually a very, very good summary page on a month-to-month basis. So when you look at all the green amount, it means that you're actually on target. But when you look into all the red amount, all the red figures, it's actually not good. It means that you have overspent, and then we have to be very careful in it. So what I do with my clients and my staff is that we look on this at a month-to-month basis, and then actually ask them, why are we spending so much money? Or is there certain reasons, like why is this not here? Why is this not there? And one little advice that I would like to give to you with your accountants or with your business consultant is actually communication. I do realize that in my years of experience is that it's normally all about communication. Sometimes, most of the times, a lot of accountants like to use very technical jargons, like I guess for you guys as well, in your own professional terms, you have a lot of professional jargons that we use. So sometimes, and most of the times, the accountants are trained in such a manner whereby they have a standard to follow, but what they couldn't understand is what the client, like what yourself actually want at the end of the day, and what do you mean. Like how do we present our profit and loss? How do we present what we want to our investors? And also different categories. We have coding issues as well. So like for example, if you buy a table, and I can classify it as expenses, or I can say that this is investment. I need to have this as an investment because this table is so special and unique, and it helps in whatever ways. So sometimes classification and also sharing with your accountant, what do you really want and what do you really think. But of course, accountants, sometimes they don't understand what do you really, really want. But you are the one that is managing your business. So with that, right, you actually should tell them, this is what I want at the end of the day, and please help me to do it this way. It is like, for For example, like when we are cooking, we have the same ingredients, but every cook is different and they will end up cooking different ways and different methods, but the ingredients are all the same. So for your books as well, talk to your accountants, let them understand where you're coming from and what you really want at the end of the day. Then it will really, really help. And of course, try to ask them to talk to you in like a layman method. How do you define certain things as well? So that would help very greatly when you are doing your budgets. With this, do you have any more questions? Assuming VCs will check potential startup income before, that means that startup should have a market before a startup is registered. Am I right? Yes, you are right in that sense. Normally, when the startup, you will normally have I would think that you will need to do some fundings, and you of course need to have a first market test to see whether is your product really something that what everybody wants. So yeah. The other question mentioned that it's important that founders take a salary. Any advice what's a good portion to take from the profit? Okay, this is a very good question. I would think that it is similar. When you're doing a budget for the company, you do a personal budget as well. For example, for like maybe for me, I have a 3-year-old boy, and I need to provide enough for my family to live comfortably before even jumping into a business. So I must make sure that the business or my own business have enough to cover for myself. What good portion? Typically, 30%, 30 to 40% is a good enough estimation of salary costs in Singapore. I hope I answered your question. How long should we plan our cash flow budget for? I would always plan for a year, minimally a year, at least 12 months, so that I know that I will be able to have enough to plan for it. Cash flow based valuation. Cash flow based valuation. Well, yes, you can do that if you want to, but there are different kinds of cash flows that we are talking about. This is the very, very basic that I'm now talking about is like really operation costs and stuff like that. Cash flow based valuation, it's more for the investors portion, whereby you can actually tell them this is how we're going to spend our money, and then this is the X amount of income that I will expect. From Cherry, pre-revenue though, are you suggesting that our salary is dependent on the profit generated? No, I'm not suggesting that your salary is dependent on the profit generated. I am saying that you should have your own salary to sustain your own lifestyle, and you shouldn't underpay yourself as the founders of the company.
Hi, April. So actually, Irene shared in the group chat that for foreigners, they should also take into consideration the requirement from MOM for their ability to stay in Singapore. So for the employment pass, they will need to pay themselves 4,500 a month. So do you have anything else to add on this point?
This nothing much to add. I just like to add one more thing would be you have to plan ahead for whatever passes that you're going to apply for. That is actually quite time consuming actually. I do have a few clients that they have really started the business, the company has been open and stuff like that, but they couldn't get their EP pass, and then the total delay was like a good 6 months. And also, if you are a foreigner, please bear in mind about the bank account opening in Singapore. Now, because there are some certain restrictions and checks, you may not be able to open a bank account. It takes time as well. So they will be checking on a lot of things. So it might be better if you have a Singapore partner who will be able to assist on all this matter as well. For equipment, better to account for 100% cost upfront or spread over a few years. Normally for equipment, we would recommend to depreciate over 1 or 3 years, depending on what kind of equipment are we talking about. Yeah. So really never keep your eyes off cash flows, because it's really, really very important. But at the same time, I do understand that when you're running a business, there are like 1,001 aspects to actually take care of. And it's actually important that you focus on having income rather than doing all this budgeting and keeping an eye, making sure that you actually have all this money. So normally I would try to ask you, if you can afford it, get a bookkeeper or accountant or business consultant who can actually keep an eye on this for you. So any advice when we should start to register for GST? Well, regulation $1 million. Once you have 1 million sales, you need to register for GST. But anytime you can voluntarily answer this, register for GST. And also it depends on what kind of industry are you in. If you have a lot of shipments coming in, for example, then yes, it makes sense to actually get registered for GST. How about PR, or must have a Singaporean forming a corp? Yes, you can be a PR. Can you comment on tax requirements for startups? Tax accounting requirement. What kind of requirement? Tax. Okay. So in a typical private limited, right, there are 3 requirements that you actually need to do on a yearly basis. 3 major departments that you actually need to report to. Number 1 would be to ACRA. You need to file your yearly AGM and file your yearly annual returns. In order to do that, we will need to actually have your accounts, which is you need to do your bookkeeping in order to report this. Then after that, during the year end, you will need to submit your income tax to IRAS. So these are the 3 things that we actually need in order for a government requirement. But if you're still pre-revenue development phase, it doesn't matter. You still have to do this. What are insurance costs that are mandatory? Workman comp, if you have staff, if you still have staff, that would be a compulsory insurance that you need to give. And then would be business costs, professional costs, like it depends on what kind of industry you are in. Professional firms like ours, we need insurance, definitely professional insurance. So really depends on your industry. Does startup need to pay GST online? Yeah, or what about other tax? If you are GST registered, you need to pay for GST. But yes, now the new regulations for online sales, as long as it's more than $400, you actually need to be GST registered. Yeah, okay. Equipment depreciation, right? Like I mentioned, depending on what kind of equipment. If you are talking about like a normal computer or a handphone, the depreciation is about a year. But if you're talking about equipments that you use, for example, if you're a printing firm and you have a printing machine that is like $1 million, for example, then we can depreciate 3 years or 5 years, depending on how we value this machine and how long will it last. Typically, 3 years will be very safe. How much will it cost to outsource the monitoring cash flow? And will it be better to save the money? Okay, this is a very good question. How much will it cost to outsource this entire monitoring of cash flow? I would say from experience, it the cost varies. It can be from $100 to $1,000. It really depends on how much time you will require from the accountant or even the bookkeeper. And of course, the quality is different as well. If you get a bookkeeper, the bookkeeper can only monitor for you, or rather just do very simple data entry. They wouldn't be able to like advise why are you spending so much, or what are the certain costs that we can do. They can only tell you, oh, you overspend, that's it. But if you are getting like an accountant, which could be more costly, it would be like hey, you know, instead of doing this method, maybe we can do it another way, or maybe we can change a supplier. So it really depends on the person and how well they understand your industry. For accountants as well, like for me, I specialize in service industries. So I am able to understand very clearly on service industries more, but like maybe for very specialized industries, I may not be able to advise as well, or like what's the industrial norm. Yeah, so I hope I answer your question. But on a good gauge, right, I would say $200, $300 would be very comfortable to get an okay accountant. Is it better to save that money? It's to me, this saving this money, right, is really how comfortable you are. If this monitoring of cash flow and this doing of budget is going to take up maybe 2 days of your time, then definitely I tell you it's not worth your time to actually delve on it too much, or rather just outsource it and pay $200 or $300. But if you can do it in like an hour, then why not save the money? So it really depends on how well you can understand this cash flow thing. Okay, how much does it cost to buy the Xero software? Well, Xero software is actually by monthly subscription. So it costs $30 if you are single currency, and $40 if you have multi-currency. There is a cheaper option, which is $20, but rarely people use that because it's like 5 transactions a month for sales and expenses. So I wouldn't really recommend that. If you buy Xero software, no, Xero don't provide training, but they are actually quite savvy enough. You can actually just go online and then just check question and answer. So you can also, there are also like providers like myself, I do provide Xero training and customization of every individual clients. So it depends on what you want, then I will set it up for you. But it's a monthly subscription. So around 40 Singapore dollars on average every month. From my experience, when do startup generate positive cash flow? 6 months to a year. So that's why 6 months to a year, and that's why I would normally do the budget 12 months. It's quite comfortable.
Okay, I don't see any questions coming in.
Okay.
Thank you, April, for sharing that today.
Okay, thank you everybody. But anyone, if you have any other questions, just feel free to drop me a text. I'll be happy to help.